Just wanted the last week. What was it about what you saw that made you feel, okay, a bull market is born?
All right, so first thing, the technicals are actually really strong right now. So you look at two risk-on sectors. You look at industrials, you look at tech specifically. Over 90% of those stocks are above their 50-day moving average. So that typically indicates you're in a bull market. But beyond that, Charles, I mean, I've studied bear markets going back to 1950. And what you see happen is whenever there's a financial crisis,
right,
the market tends to bleed out slowly, and then it takes 4 to 5 years to get back to break even. However, whenever there's a policy-influenced bear market, something that's kind of self-inflicted, man-made, whether it's the COVID lockdowns or tariffs, those hemorrhage quickly and they snap back super quickly.
Right, and we saw the V-shaped recovery back then. It's the fastest bear market and the fastest recovery. And to your point, what about, though, you do acknowledge there's some consumer stress out there. Delinquencies up across the board, mortgage, auto loans, credit cards, student loans, obviously, they just came back on. But the bottom line is they're all moving in the wrong direction.
Yeah, so, I mean, if you think about it, you go back to COVID. I mean, a family of 4 got, I think, $12,000 of stimmy checks dropped in their mailboxes during COVID.
Right.
The issue is you start to ratchet up your lifestyle. And as soon as those stimmy checks stop hitting the mailbox, you have problems. That's why when you look at 90-plus day delinquencies on auto loans, I think it's 4.9% right now. Credit cards are at 12.3%. We're back at 2008, 9, 10 levels. So that is certainly scary, and we got to make sure that doesn't lead to a bigger crisis down the road.
All right.